Hello, everybody. Welcome to All-Star Financial Quarterly Review, third quarter 2016 webinar. Uncertainty lingers as the election looms. Bob's Corner, to start out, this kind of replicates what we're doing on the newsletter. Bob's Corner, we want to thank profusely Bruce for all of his good work the last 18 years. We wouldn't have been here and we wouldn't be All-Star Financial the way we are without Bruce's strong discipline and his value-driven process and great money management skills. We do wish him the best in retirement and welcome Alexander. Alexander comes to us from the U.S. bank system after 20 years of managing money in Florida and in Minnesota. We look forward to his experience in guiding us in the path that we've already paved with Bruce. Looking at market overview, we want to talk about a little bit of the uncertainties that are lingering out there, and as the election is upon us, those have been typical for the year at the Brexit, interest rates, China, and oil. Some of those have worked their way through the system. The greatest unknown still is the election, and we really want to make sure that you understand that going into the election and through the election, what you should expect is really continued volatility, even perhaps more volatility than we've seen this last quarter. That last quarter, the volatility shrunk, probably increased a little bit. Don't be misunderstood. I think there's gonna, no matter who wins, political gridlock will probably be the mode of operation. But all through this, we have new opportunities that present themselves, and we want to make sure that you guys understand we're looking for those. So any time of up and down in the market, any type of volatility is a benefit to us. Let's talk about the U.S. economy. U.S. economy is based on basically GDP-wise, 70% of the GDP is based on the consumer spending. Well, consumers have done a pretty good job. Household wealth is up, debt service is down, lowest since it's been since 1980. We see incomes up, we see wage gains, personal savings is up, considering consumer spending is important. It's been flat to slightly positive. We also have two things that we think should benefit the economy, and that's inflation is staying low and housing has remained strong. The problem we have, and it's still disappointing, is really the decrease in business spending has really not allowed us to get over that edge of the economy. So real GDP only grew at 1.4% this last quarter, hoping for something more in the lines of a 3% annualized going forward before our economy can be really defined as strong. So looking ahead, unemployment's low, right? We have remains below 5%. There's 5.6 million jobs out there. However, again, we need to have the confidence from businesses to start spending in that 20% of the GDP so that those numbers will go up, and our economy stronger. Bond market. Really, we saw a taste for the rising interest rates just recently. We saw the Treasury yield bounce off the bottom 28 basis points. Barclays about 0.5% total return. Interest rates go up, bonds usually go down, but again, it was a better than break even for the bond market on the U.S. aggregate. Corporate and emerging bonds really still provide us the best yield advantage from a risk reward standpoint, and our high yield bonds did about 5.6% in the third quarter. Improved credit quality, a stronger dollar, those are attractive yields, again, that we're looking for both in the high yields as well as the foreign securities. Looking ahead, I think the caution should be that bond markets, as we believe domestic stock markets, the domestic bond markets are basically fully valued. We should see a raise in interest rates sometime soon. I'm betting that it probably won't happen in December. Other people are betting on the other side of the equation. Central banks around the world are declining interest rates. So we have this diverging path, which the market didn't like the last time we saw this, which was December of last year. So it should be interesting to see what happens December of this year. In anticipation of this, All-Star Financials using more floating rate bonds with preferred stocks. Our next mode probably would be something in the REITs to master limited partnerships category in search of yield. When we look at stock markets, you can see the domestic stock market has really kept up fairly well relative to really what the growth of the earnings have done. Earnings have kind of been flat to negative, yet we have the Russell 1000, the large caps of the domestic stock market, up 4% for the quarter. Russell 2000, which mid and small caps, up 9.1. That consolidated return is 4.4. For the Russell 3000, financials and technology were the leading sectors, as well as utilities and telecom, the greatest downturns. But again, all of this happens with not a lot of great earnings reports, and some earnings reports that are a little artificial based on stock buyback programs. Internationally, however, it's been the best or a better value for a long time, and I think we were finally rewarded. We saw the global stocks SUSA went up 7.2%. Europe, Asia, Far East, the EFI index as a part of that was 6.4, as well as a small cap EFI up 8.6. Japanese stocks obviously made a nice 11.1%. So bringing the stock market into the equation of what's going to happen going forward, I think patience worked for us, particularly on the international side. Being a continued aggressive central bank action of lowering interest rates overseas is going to obviously help their and our exposures internationally, as well as, again, the valuation. So when we look at domestic and international stocks, obviously domestic stocks brought us decent returns with very little news to do that. Internationals gave us even better returns with basically our value-driven approach finally being rewarded. Summary, we look at really a year of uncertainty and just more uncertainty as we come to the end of the year. Potential turning points, again, what we'd like to mention is the outcome of the presidential election. Who will lead us? Doesn't matter. Gridlock will persist. I don't think it will matter, and I do believe gridlock will still be there. However, it's been an interesting time period that has created a lot of volatility. Along with that volatility is the Federal Reserve. Are they going to raise interest rates? Will we see this dichotomy between international rates coming down and domestic rates going up? I think that could be a scary thing for the market again. Best route to success, though, is always and will always be remaining unemotional, remain unbiased, and basically eliminate that fear and greed scenario through diversification. If you look on page 5 of our newsletter, talked about the last 39 months of volatility and how we saw huge volatility strengths, not only in just the domestic stock market, but international markets. The dotted line is our consolidated averages. And what we did is we looked back and we said, okay, for the last 39 months, how many days did the U.S. stock market or bond markets or whatever indice take a 1% greater hit in just one day? And we saw basically that our income portfolio only had 9 negative 1% or greater down days over 39 months. Over that same time period, the aggregate bond index was down 42 times. So again, very, very conservative. We're looking at this much volatility versus that much on the aggregate bond. When we look at our balanced portfolio only had 28 down days relative to, again, the aggregate bond index at 42, and this is about 45% equities. And then our conservative growth model just slightly over the bond index, 45 days versus the bond index at 42. We don't get into more risk than the stock market until we get, or bond market, until we get to the growth model. We had 65 days of the growth model, obviously a little bit more than the 42 for the bonds, but significantly better than the EFI that was 89 days of 1% or greater, as well as the domestic Russell 3000, 105 days. So again, the promise of it, it's not how much you make, it's how much you keep. We're taking risk from here and bringing it down to here, 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 and here in our models. Works, and you get a better compounding effect of your dollar. So we're really pleased with what's going on. Our Just for Fun, 6th page of our newsletter, we've got a recommendation of Baker's Ribs in Eden Prairie. Phenomenal ribs. We have a tradition of celebrating birthdays around the table here at lunch, and we had that ordered in just recently. Phenomenal ribs. Paula gave us a nice recipe of Paula's apple crisp pie, and we always like to do a quote. The quote we have today is really in honor of Arnie Palmer, and his quote was, as one of his famous quotes was, "I have a tip that can save 5 strokes off of anybody's golf game," and that's called an eraser. So kind of a funny quote there, but again, a great man and a great golfer. Thank you for your continued confidence in the All-Star team and what you're bringing to the table as far as helping us grow in that referral program. And make sure you give us a call anytime that we can help you. We're more than happy to give you a call back within that 24-hour time period is our goal. And again, thank you for your confidence. And for those people who are looking at All-Star Financial, we thank you for your interest in us. And please let us know if we can answer any questions that you have. Have a great day.